Hello and welcome to Vox Markets. I am John Hugh and I'm very pleased to welcome back Dr Ilian Iliev of tech investor NetScientific. How are you doing, Ilian?
Very good, John. Good to see you.
Excellent. Good to have you back. Yeah, and we've got some really exciting news to talk about today. The acquisition of Martlet Capital and a deal to take over the running of its deep tech and life science fund. Give us a feel for the deal, the rationale, and sort of the mechanics of it.
John, thank you. Well, like we discussed last time, our ambition is to become a leading deep tech and life sciences venture capital investor in the UK and Europe. We do so through a differentiated investment strategy based on proactive management of our portfolio, working with value creation services to support the businesses as they grow, but most importantly, having access to different types of capital and different investment structures to work with companies across the life cycle from early stage to later stage of investment. Investing in deep tech and life sciences is very different. Investing in fintech or crypto or others. And we have been developing this playbook for many years. Within that, we are now looking to launch we're looking to grow and accelerate our fund management practice. And the most recent announcement around Martlet Capital is very much in that direction.
Yeah, and it doubles the size of the assets under management, so quite a big deal for NetScientific.
It is indeed, and it's really exciting on many levels. Certainly on the financial metrics side, as you say, we're adding 23 million pounds of fair value, or rather assets under management, with investments in 53 companies. This includes some of the most exciting Cambridge startups at the moment. But in addition to that, we're also gaining a team that's specialized and focused on this type of investment, on sourcing these deals from the very rich Cambridge ecosystem, as well as helping in the early stages of development when they start talking with investors such as ourselves. In addition to that, what we get as part of our fund management model is, we're looking to have a balanced, from a financial perspective, entity. And we are gaining significant management fees that will cover or more than cover the costs of managing the Martlet portfolio. Now, this is kind of phase one, and we believe that both the Martlet shareholders and our shareholders will benefit from the carried interest we get over this portfolio as the portfolio exits. It is a mature portfolio. Clearly, 53 companies is quite a size. But what we're also working with the Martlet team on is the launch of a follow-on fund, Martlet Capital 2, that will look to continue to make investments in the same space, in a similar approach, but learning from the past, and now part of the EMV Capital infrastructure. So there's both things to be happy for today. If that's all we did, it will be really exciting, but even more exciting looking at the future, what this means for the growth of our group.
Yeah, indeed. And this is a company that you know very well. You've been working with them for some time. Talk us through your history with Martlet.
I mean, look, some of this goes back to where I was a PhD student at the Judge there, and when I first started learning in the early 2000s about the Silicon Fan phenomenon, and which at the time was a lot less known, and Martlet Capital at the time, part of Marshall's, was an important player. So I've been aware of the great work that Robert Marshall and his team are doing for a long time. That's why when in 2021-22, the opportunity came for us to support the spin-out of Martlet Capital from Marshall Group, it was a no-brainer. We knew the importance of the group within the Cambridge ecosystem, and we were very happy to support at the time, both with investment and expertise, working alongside Saranac Partners, a well-known multi-family wealth manager. Since then, we have worked alongside the Martlet Capital team, helping to refine their strategy, helped them to think through the growth strategy from our perspective. We're quite symbiotic and synergistic. We're focused on the same space, but we do different things. Late last year, it increasingly became apparent that it makes sense for us to work a lot more closely. So this isn't something that we have rushed into. If your listeners take the time to read through the RNS, there is a lot in there. It is a fairly structured approach. For NetScientific shareholders, it's a highly advantageous transaction. It is non-dilutive, no cash, no paper was used. In fact, we get cash up front for the management of these assets. but also it's a win for the Martlet shareholders who themselves avoid further dilution through us managing the portfolio through to exit, while they also gain exposure to future opportunities on the back of the Martlet brand. So it's one of those very rare things, what I call a win-win-win-win. And it's not just a marketing gimmick, although it does sound nice, but it genuinely is the case, as in you can test it, and we believe that is the case.
Yeah, no, it really does sound like a fantastic deal for all parties concerned. Perhaps you could talk us through what this leaves NetScientific looking like. Presumably, you're bringing a lot of expertise in with Martlet, but you've got a lot of expertise of your own already. How do the synergies work between the two teams?
Well, the Martlet team will be very much part of our team. They retain their brand and some level of autonomy in terms of selecting deals, early stage deals from the Cambridge cluster. But the reason this makes sense is because they plug into our overall infrastructure, both as an FCA authorized fund manager, but also the value creation services that we can provide to companies on a selective basis, access to our international networks, corporate support with corporate linkages, and so on. So it's not going to happen on day one. We will work together to develop that, but we also are going to have access to the expertise of the Martlet team to support our other deals, the non-Cambridge deals that we do. So that's really exciting. From a NetScientific perspective, this is exactly what we have outlined to the market, that we are moving towards becoming a leading deep tech and life sciences VC investor in the UK and internationally by growing our fund practice alongside the syndication that we have done. For instance, having this larger deal flow, proprietary deal flow, genuinely proprietary deal flow, NetScientific over time will have the opportunity to participate selectively through its balance sheet in certain investments. It has now a much broader investor base that it can co-invest with in the Cambridge deals and beyond. So it is quite significant for us.
Yeah, indeed. And I mean, presumably this really sort of deepens your network into Silicon Fen, as you mentioned. I mean, it's a real hotbed of innovation. Just sort of tell us about where this leaves you in relation to the whole Silicon Fen phenomenon.
Absolutely. And I mean, often these things can be overhyped, but I think in the context of Cambridge, it is not overhyped. That is genuinely a globally leading cluster of innovation. And I've spent the time academically researching this and then working in a previous startup and now, of course, with Martlet Capital. So I myself have lots of links and have been following developments in Silicon Fen. So this is really exciting now to have a landing base that we can build out of. What I would say is over the last 5 or 6 years, what has happened is that the scale of growth of Cambridge-based companies has really gone to the next level. It used to be in the early 2000s that it was the angel investment groups and early stage EIS funds that were funding most of those investments. The checks were smaller. Silicon Fen has been discovered, quote unquote, by global VC groups, global corporates, and time again, you're seeing some of the best exits in this space happening to Cambridge-based companies. Deep Trace is an example. ARM, of course, is. If you go to look at today's headlines, there are some other similar exits that have happened. So we're really excited to be part of that community, to deepen our links to that community. What I will say, on the other hand, is it is notorious that UK companies, I would say to an extent Cambridge companies, sometimes are slow to internationalize. Now, very much a core part of the NetScientific and EMV infrastructure is born global from day one. We have strong access to the US through our US portfolio. We have strong access to elsewhere in Europe and the Middle East through other work that we're doing there. So we'll be looking to support the Martlet team as well as a selected number of their portfolio companies by providing them access to these international markets. Now, we're not doing this out of charity. Ultimately, we are focused very much on investor returns and shareholder returns. The way we see it is that this proactive strategy provides a way of accelerating exits, increasing the value of exits, but also defending companies that would have been in trouble otherwise, avoiding them or helping them get out of trouble. So on a balanced perspective, we see this multifaceted approach as having great promise for driving superior investor returns.
Yeah, indeed. And you mentioned, the world has sort of woken up to the power of Silicon Fen, but presumably, it feels like we're still at a relatively early stage in the grand scheme of things. There's a lot to go after. Tell us sort of what you would hope to achieve over the next few years, specifically as a result of this deal. What are the milestones we can expect as you kind of sort of it beds in the months ahead?
Sure. So there's a lot of internal KPIs and milestones I won't get into, but from a NetScientific shareholder perspective, what we expect is several things. First of all, an acceleration of the growth of our fund practice. And our fund practice is not only focused on Silicon Fen. There is a number of other initiatives that we are developing, but this is a major piece of it. So certainly we're looking at accelerating the growth in our AUM on the back of Martlet Capital 2 and MGF Martlet Growth Fund, if and when it launches. None of these things are guaranteed, of course, so we'll be making announcements as and when appropriate. But there's synergies with other fund initiatives we have. So overall, we anticipate an acceleration of our AUM. Operationally at EMV and NetScientific, this also means a higher level of management fees, which in turn means greater financial stability from a going concern perspective. This is not instead of the corporate finance fees, value creation services fees and exits, it is in addition to them. So overall, we expect that this will be a stronger and more stable business. We also anticipate the multiplication of linkages will also help us accelerate exits and growth of NetScientific's own portfolio. Again, we're right in the middle of the action as far as the VC industry is concerned. So it's on many levels, and as you say, it will take time to bed down, but we've already done quite a bit of work thinking how we're going to make use of this new asset. Best is still to come.
Yeah, absolutely. No, it's a fantastic deal. Many congratulations for getting it over the line. Thank you, Dr. Ilian Iliev, for speaking to us today.
Thank you, and call me Ilian.
Thank you.